Good morning, everybody. Welcome to today's live stream. Bitcoin has finally broken the most significant resistance that we are aware of. And to be honest, there's only one reason for this significance, and it's kind of a bad reason. The 10K value is so important because humans have 10 fingers. And while this sounds like bullshit, just bear with me. Right? The only reason humans use a hexadecimal system because we have 10 fingers. It's predicted that when we finally encounter alien life... Oh, my green screen's off. Hold on. Okay. It's predicted that when we find alien life, their number system is going to be based on how many phalanges they have. So, humans like round numbers. They're aesthetic, okay? And aesthetic values tend to be respected only because people want to play them. And the reason this is so important is because it's really not important. Let's be honest. It's an implied importance put there by human bias, okay? 10K is a significant value because we say it is. It's arbitrary, simply because of the way we're made and how we function as human beings and what we find important. Aesthetics and round numbers. That's it. Really, there's no prior resistance value at 10K. It's just respected because people like it. I'm sorry, guys. That's it. So we have this really obvious and active parabola. You know, if you look at the weekly chart for Bitcoin, and we'll pop over to the BLX chart real quick here. Beautiful. Right. If we actually look at this information, it's straight and simple. It's the parabola. And it's going very similarly to how the previous Bitcoin bull run went, you know. And goodness gracious. Have you ever heard of the following concept? A logarithmic trend that accelerated. Just bear with me, because it's bizarre. It's really bizarre. So, each successive cycle of Bitcoin's pumps and compressionary periods, then pumps and compressionary periods, and pumps. Why would we now get a faster compressionary period, right? Why would this compressionary period be the shortest as compared to the previous ones? It wasn't the logical scenario to bet on, which would be the simplest way to say it. Why would we repeatedly expect higher highs before we've even defined a low period of volatility and compression? This markup has been aggressive and rapid, and honestly the least probable scenario. What if I told you the only way you could have made money this last few months in Bitcoin would have been to hold Bitcoin and do nothing else? Right? No trading alts, no tethering, just blindly hold Bitcoin a year and a half into a bear market. It doesn't really paint the best picture. So, what about the daily? We can actually define trend on the daily pretty cleanly, which is lucky. Because at least we have defined pivots for trend, and as long as we're above them, Bitcoin is trending aggressively upwards. So, the daily parabola is super defined, super clean. So, longest overexpanded period on this parabola is currently 125. So, let's go ahead and load up the relevant pivots, shall we? And honestly, because we have this slow tapering, walk in the park value that constantly rises of its own accord, right? Because if you have continuous comprehensive net expansion to the upside, you're constantly expanding longer periods above the current. So, we are going to load up ACAT which will automatically define our longest overexpanded period and show the band correctly. Helicopters. That's weird. So, yeah, we're just waiting at this point. Let's play around with our settings. Because that's gonna take a long time to load. It's gonna check indicator titles and remove indicator last value label and save my chart template, because my god, I don't know why this won't save. Beautiful. We're gonna hide Bollinger Band Meow Mix and take a look at our trend. Okay, I know there's a lot of information here, but bear with me. All of this is relevant. Particularly what we want to be looking at, and I am going to play with the aesthetics of this because it's chop mussy right now. Later, let's just talk about what's important here. Okay, as long as we are above this blue line, trend on Bitcoin is defined, and trend in theory should continue. Simple as that. Okay. And I have a comment on the YouTube channel that says, the cause of the accelerating logarithmic curve could be the bear market isn't over yet. What do you think? Dude, I would love some confirmation of that, you know? When we get the break of this line right here on daily trend, like this huge line right here, this pivot, when that breaks, sure, we can start getting a bearish perspective again. But until then, it's just not worth it. No more shorts, okay? I am changing my bias for the time being. We have a parabolic trend, and it is continuing until this pivot is broken. And when that pivot is broken, I will short the hell out of Bitcoin. But until that happens, I am extremely hesitant to do anything about betting against the trend at this time. All right, we had 2 failed mean reversions in the last 2 months. And that's kind of like my quota for just trading the trend. This was, let me think. This was the first failed mean reversion. And I can just draw them out. Actually, it's not going to show on ACAT because we have a previously longest overexpanded period that isn't registering. But we'll just switch to regular bands again. Thank you very much. Actually, hold on. This is actually really aesthetic because wow, just the way that defines trend is just so clean. Of course, there's a lot of information on the chart, and I might just be cherry picking. But since it's consistent across a lot of time frames, it's, well, we can get into the fundamentals of volatility theory if you really want to. Actually, instead of me just baiting you with that, I do recommend you go to my Trading View Ideas and look at my most viewed post called The Basics of Advanced Volatility Theory. I do explain a lot of the concepts I'm touching in here there. So, you know, when we actually get the activation of mean reversion conditions, they complete, but not before they absolutely destroy your profit ratio. And I'll be honest, we had the activation to converge the condition at this candle, and then we had the short entry signal here, and then we stopped out, and that's it. Okay, so it's one losing trade on that front. So, trend continuation, we're getting a new plume of expansion, which we can define on the 15-minute chart, and successfully trade on the 15-minute chart. So, good news is, there's still tradable information here, even on the 15-minute. So, longest overexpanded period still super far away. I'm going to try the 5-minute because we're actually getting some volatility overhead here. I don't like taking readings that account for previous expansions, so we're going to do the 5-minute. Okay, and now the resolution is too high. Right, we have too many candles that our look-back period isn't accurately representing our mean reversion. What is good, though, is Well, we did point out this mean inversion, and that did complete, and then we saw trend continuation. But now this plume of mass is just still tapering on from the previous overexpansions. So it's hard to get a clear reading. What you can do is define upward trend and take the swing lows. Yep. ACAT is an excellent tool for a compressing market. Typically crypto and always Forex. So if we have a trending market, it's reasonable to use a tool designed for trending markets, which would be Quad CCI. All right, let's try it on the 2-hour chart, just so I get a fresh look. Okay? Nice. So, when you have a trending market, and you have significant CCI weightings of your longer periods, like happened here, when your lower period CCI rolls up, like on this candle, and let's draw a vertical line, just so we can see where we would take the long. Right, that would be your long entry. So our long would be right there. Not the best. So in this scenario, an attempt to trade the trend, that would have been a long entry. And what else do we have? Right, all we want is significant weighting to one side and then a CCI roll up. So this would have been our other long entry. Okay, and obviously this one would have outperformed the prior. So, betting on trend continuation. Yeah, take the quad CCI rolls. It's good. You know, if you get a 14-period CCI roll up, take it. You have a trending market, trade the trend. Right? You know, if you're a year and a half into a bear market, you use tools to trade a compressing market. And now that we have a trending market, use the tools to trade a trending market. Simple as that. So, with this in mind, that's it. That's all I got to say. What do I think about the chances of starting a new bull run, though? As long as the parabola is defined, bet on the trend. These two areas are just astoundingly similar. I have to say it. Right? The super beef drawdowns and then successive higher highs implies a bullish parabola. You just bet on it. Bet on the bullish parabola. Right? If that support we define on the daily, right, 8,100 breaks, then the trend's over. So the problem is, our pivot point for mean inversion is over 20% away. Like, how do you properly trade this? A few months back, I said something. My two conditions for Bitcoin's bull run is one of the following: a retest of the weekly 200, that's where you buy in, or a sustained move above the weekly 50 moving average. And, well, we had the sustained move above the weekly 50. Okay? So, trade the trend. I love you guys. See you trading view. Alright, YouTube. Let's see what you got for me today. Give me your altcoin comments. I'll take a look at FUSD because Cat is playing that one pretty hard. I'm going to guess it's an active parabola. Actually, no, because FUSD keeps falling. Or FBTC, excuse me. Although this is a pretty strong breakout. 293. I've got a small bag of F that I accidentally left on Kraken. I'm kind of happy about it. Like, it's going to pay for a vacation one day. I'm sure of it. Like, F at 200. I bought in here. Like, literally on that candle. And I just kind of forgot about it. And it retraced down to 80 bucks. And I was at 290. So, hey, I'm a bag holder. I'm an F bag holder. Like, I chose to bag hold. One of the only coins that has, like, been okay to bag hold. The other one was Link and BNB, and that's it. And maybe Holo. But, I don't know, man. I'm long-term bullish on FUSD. Yeah, I have a little bit of bias there. I mean, we're testing that support after we just broke it. We're getting comprehensive net expansion. Oh, my God. Yeah, this is trend continuation. That's great. I love it. Yeah, good chart. Trade it. And we had our mean reversion condition complete because, well, it went below the 0.7 value. Like, wow, the same candle. Watch this. Hold on. That's really clean. Watch this. I'm going to open up the data window so you guys get a good understanding of what I'm doing here. So, you see here the longest overexpanded period's 275. Alright, now watching the data window, this value right here, watch where it turns green. Not yet, there it is, this candle, okay, right there. So, on this candle, trend resumption was possible. So, got a vertical line, let's check it out. Alright, so right there, trend could technically resume, and it is, so, upward trend. Very nice. Upward trend on FUSD. I like it. Let's check out Litecoin USD. Didn't Litecoin like retrace to $80? Or $20, excuse me. Like, Jesus. It's hard to trade this because of the sustainability of the trend. Okay, like, watch. When you get these kinds of significant unsustainable moves, it generates really clear mass readings, so you know where trend is defined as. But when you get these slow, tapering, bullish trends, like, what are you supposed to do with that? I don't have a mass reading, so I can't define the pivot point for mean reversion on the macro time frame. And I can only do so barely on the 4-hour chart. Like, it's just all chop. It's a defined upward trend, so what do? Well, you change the tool you're using to match a trending market. Simple as that. So we're going to use a pitchfork today. I think this is an inside pitchfork. Let's give it a try. I want to make sure I drew this correctly. It's not. Okay. Probably assuming... Alright, so if you want to do an upward trend for an inside pitchfork, you want to take the swing high and attach the swing high up here. I don't think a default pitchfork is going to save me this time. Or I could just stop overthinking it and do a regular pitchfork. I mean, what am I doing? Come on. Where you want the swing low, to the swing high, to the swing low, of course. And it's defaulted to shift again, so 1 second. Gimme, boy. Original. Hooray! We have trend definition. Cool. So we used a tool defining the trending market. Nice. Well, buy the bottom edge, sell the top edge. Shift pitchforks for the win. Did Bitcoin just drop $100? It didn't. It did. Huh. Hold on. Let me check out Nano. Dude. Okay. I'm guessing you're going to get a little bit of confluence right here at 1380 just because you're going to be tagging like every standard deviation, every 3.2 standard deviation on every period, and it's pretty much all over expanded. Like, that's a pretty good reversal signal. Like last time we saw it was here, and well, that had a pretty strong rebound. So just recognize the risk of betting against trend. You know, if you have significant mass and you're tagging your 3.2s, reversal positions can work out pretty well. So yeah, consider it. Yeah, just go for that 1380 mark. See if you can grab that bounce. CDT. Dude, why is this so volatile? Oh my god. How come I haven't looked at this? Oh, this is a really good range. Dude, Quad CCI is perfect for this. Look at that. If you just took every 14 period CCI roll, you'd probably do very well. I'm going to keep an eye on this. Hey, ask your final coins, folks, please, so I know what to look at. Otherwise, I'm just going to click through my watch list. We're all getting the same bounce pivot. Like, CBC is doing the same thing as well, and I'm pretty excited about it. Okay, like, when you get every wave PM period above 0.9, and you're tagging your 3.2, you get significant reversal. It's really consistent. And, like, let's see if we can find an instance of the downtrend, just so I can point out how significant this is. Okay, right here, this candle. Do you see this? Right? Okay, watch. Every period is overexpanded. Every period is above 0.9. When you're tagging your 3.2s, what happens? You get a huge reversal of 35%. It's a good signal, right? You're just betting against trend. We're defining an extreme value. We're actually using the term oversold. Right? Because typically your outer standard deviations don't do much unless they have significant mass. And if they have significant mass, then it's a true outlier, right? Because if you have a wide distribution that's been in a state of expansion and you still tag the extreme values of the expanded distribution, then you can reasonably assume that it needs to return to a state of normalcy. Right? A state of expansion kind of kills a lot of overbought and oversold signals, but if you are already expanded, then you might have something. Dude, EVX is not balanced at all. We had a really good GXS call. I'm super happy about it, because we actually grabbed the exact top of the longest overexpanded period, and it treated us really well. Yeah, we actually managed to catch this candle here for 20%. Why? It was just right on top of that longest overexpanded period, right? It was 200, I have this, or 225, I have this band set to 225. It retraced directly onto it, and just immediately saw the pop off. So clean. Check out link. Dude, you have a lot of converse expansion here, and it's hard to read. I mean, most obvious thing we can do is look at this here and see the 40 period and assume the 40 period mean reversion, which is completed. But then what? Like, do we have a daily mean reversion pivot? Nah, it's super sloppy. The resolution's too low. Finding a balance in resolution is like my new endeavor. Or finding a constant for look back period, but that's a different monster entirely. Trade laterally as defined by the 1.25 of the longest overexpanded period, as long as it's above the 0.9 value. Yeah, we would be able to define this compressing range, but it's done. You know, trend continuation can, in theory, continue. We don't have any defining pivots. We have this really clean downward expansion, which should generate mass, and we will be able to get a reading off that, so that's good. Let's check it out. All right, we're just going to finish up link, and I'll be done for the day. We want to take a look at the 300 period. Yeah, no mean reversion condition has been activated yet, but we are getting pretty close to it, so I would definitely keep your eye on this chart. So, you know, once we activate this condition, consider the long. If we have a volatility pop to the upside, try to catch the CCI roll up, and you should have a good upside here. Because at minimum, you can probably get 10% out of it, and then if trend continuation occurs, then you're free selling. All right, friends, this has been a wonderful time. I will talk to you all tomorrow at the same time. Have a good one.